It went from the start of an offensive to a complete government collapse.
What really happened is that Turkey backed these rebels to push out the Assad regime. But a lot of these rebels are ex-Al-Qaeda. There's all kinds of radical groups that are in this rebel group that just pushed out the Assad regime.
The enemy of my enemy is my friend.
Yeah, but it's almost like the enemy of my enemy is still my enemy. But now he's saying, hey, no, I'm moderate now. I'm not like, I'm older, I'm more mature. But people are like, yo, like, you don't just like switch sides like this. You just don't go from jihadist to like all of a sudden you're accepting these other religions. So
what's up, everyone? Welcome back to another episode of the Adventure Capitalist Podcast. My name is Austin Brunner. I'm here with my co-host, the traveling man, Cody Shirk. What's going on, dude? How are you doing?
I'm good. I'm at home right now, so I'm not traveling. But
I know, but you always...
I know, I'm always on the road. I have some trips coming up, that's for sure. But I'm at home, safe and sound.
I know. Normally, it's like a very, very quick drop into home, and then you're back on the road. Where are you headed next?
Next, I'm going to Arizona. I'm going to go hike in the mountains. Arizona, if you live in the US, I guess around the world, you think of Arizona as this like barren desert. There's a lot of mountains in Arizona, and it's a winter right now, so I'm hoping to get a little bit of snow up there, do some mountain biking, some hiking, and enjoy the wide open wild west of the US.
Nice. Yeah, Arizona, living in Oregon, like people just they flee Oregon in the wintertime, and it's Arizona, Hawaii. Everybody has to get out. And there were some guys at the gym talking about their houses in Arizona, how they just go down and just escape all the wet weather.
Yeah, you're in the wet zone right now, right?
I'm in the wet zone, baby.
You're getting
the
some
wet
serious
zone.
rain. Yeah,
getting some serious rain. I'm excited. Got a great episode today. Before we dive into it, I want to welcome everybody who has joined us over the last week. All the new listeners. It's awesome to have you here. We are fired up. Podcast is growing, man. It's growing, and we are excited. If you have not shared this with a friend, if you listen to this podcast for more than a couple of weeks and you haven't shared it with a friend, do us a favor and share it with somebody who you think you'd like it. That's the best way for us to grow. And yeah, we're excited. Let's dive in. There's a lot that's gone on this week. Specifically, kind of a follow-up from last week, because we talked a little bit about this rapid pace of the war erupting in Syria. And then this last week, it expanded even more. So it went from the start of an offensive to a complete government collapse. So the Assad family's half-century rule in Syria has come to an abrupt and dramatic ending after, it was 13 years of war, and then about a week between the start of the conflict, when November 27th, when the initial rebel offensive happened, to December 7th, when they surrounded Damascus and they initiated what they called this final phase of the offensive. And then on December 8th, they declared that the regime was over and Damascus had been liberated. And Assad, Bashar al-Assad, who was in power for 24 years, is no longer in power. And he is actually, most people are saying he is in Russia taking refuge. So there's that saying, I believe it's like there are decades when nothing happens, and then like weeks when decades happens. It's something like that. I'm completely butchering it. This is an example. A lot of change happened in Syria in the last week. Tell me, what happened? What does this mean for the world, Cody? Who wins and who loses in this dramatic turn in Syria?
That's a great question, and I think everybody's asking that question. There's definitely some losers. So clear losers, or on the losing side, because there's different degrees of losing. Clearly, it's Russia.
Clearly Assad.
Yes. Well, yeah, that's the biggest loser, Assad, right? He had to
the Assad
escape.
Family. Yeah. That's the biggest loser in all this.
Absolutely. So he lost.
Yeah.
The Russians and the Iranians who were backing Assad are clearly losers here. Winners-ish. Turkey, probably number one winner. And then down the list, you've got U.S., Israel, others. There's some asterisks to all of those because
Yeah.
this is really. Also, I want to say you were speaking from a U.S. perspective. I think you and I have some pretty good intel on all sides, just because we spend most of our days looking at foreign media, talking to people on the ground, different countries. So I think we have a relatively broad, understanding of what we're seeing here. But there's crazy propaganda from the Russian side, from the U.S. side, from the Turkish side, from all these sides. So whoever's listening to this that may have a better take or a different take, not necessarily better or worse, it's just whatever news stream or information feed you're receiving. And, we're all on these Telegram channels looking at real, like, on the ground insights, and it's so hard to tell what's going on. But those are the basic winners and losers right now. The problem is what happens next, because what really happened is that Turkey sent these rebels, or, backed these rebels to push out the Assad regime. But a lot of these rebels are and I'm saying ex because that's what they've said, ex-jihadists. They're
Ex-Al-Qaeda.
Ex-Al-Qaeda, suspected Islamic State. There's all kinds of radical groups that are in this rebel group that just pushed out the Assad regime. So a lot of people are glad that Assad's gone, because he's been accused of all these crazy atrocities towards humans. But who are these other people coming in, and what does that mean for Israel? What does that mean for the U.S.? What does this mean for the Kurds? What does this mean for all the countries surrounding there? And that's what nobody knows what's going to happen yet, but that's probably the next thing to be concerned about.
Why did Turkey want Assad out? What was their main reason?
So their main reason is they're bordering Syria, and there's been 3 million Syrian refugees in Turkey, and Turkey wants to return the refugees back to Syria. And to be fair to the Syrians, they want to go back home too. So that was Turkey's.
And they all left because of Assad.
Yeah,
and the Assad regime. They're
exactly.
fleeing the regime. Yeah.
There's the regime persecution. There's religious persecution. There's ethnic persecution in the regions. It's such a confusing part of the world. So that's why Turkey, the number one reason, at least on paper, is to say, like, we border this country. Turkey saying this: we border Syria. We can't have this problem. We're pushing you back, and we need you to change what's going on here because it's not working out for us. I would make the same argument on a much smaller scale for Israel, because Israel is a much smaller nation, but it's also a much smaller border area that's been affected. And then you can make the same argument for Iraq and for the U.S. occupation of eastern Syria. And then, of course, Russia's in there as well. It's so confusing. And then the last thing I'll finish with before we jump into other parts is that Syria is in such an interesting geographic location. So if anybody's watching this doesn't really know what's going on in the Middle East is been at war for so long, hundreds, thousands of years now. And it's this region of the world that's always in turmoil. But Syria is in particularly very significant because of its location. You have to go through Syria to get from, the Middle East to Europe through Turkey. You have to go through Syria to get access to a lot of naval ports. You have to go through Syria for so many reasons. And again, that's why Damascus has been such a historical city. It's just geographically very well located to be at a crossroads for all kinds of different civilizations.
So let's talk a little bit about, before we move on here, the leader of I'm going to say this, Hayat Tahrir al-Sham, HTS, which is the lead rebel group, one of the rebel groups, one of the larger ones that went in and liberated Syria. The leader is Abu Muhammad al-Jalani. And the U.S. still has a $10 million bounty on his head. Why does the U.S. have a bounty on the leader of this rebel group's head? And what should we think about that?
So his history, he's actually Syrian. And right after 9/11, he was a sympathizer towards the extremists that claimed responsibility for 9/11, and he actually fought against the U.S. in Iraq, and there's speculation of where else he was traveling throughout the Middle East. So he was a clear opponent to the U.S. in these wars years ago. But now he's saying, "Hey, no, I'm moderate now. I'm not like,
I'm good.
I'm older. Good. I'm more mature.
I'm chill."
But people are like, you don't just like switch sides like this. You just don't go from jihadist to like all of a sudden you're accepting these other religions. So, and I think this is So there's so many complications here because the main players right now, the U.S. is really not a main player from a geographic position because we're on the other side of the world, right? Turkey, Russia, Iran, they're much closer, much more impacted here,
Yeah.
and it's very tempting to want to involve the U.S. here, but historically speaking, it's all these other nations that are much more relevant to what's going on here. I think where the U.S. has this bounty on this guy's head is totally ironic for the U.S. because the U.S. maybe wanted him to push out Assad, but then
I mean, it's the enemy. The enemy of my enemy is my friend.
yeah, but it's almost like the enemy of my enemy is still my enemy in this case, or the U.S. can't make it. And we'll go back to the other article we left or mentioned in the previous episode, which was the CIA was backing one group in Syria. This is about a decade ago, and the Pentagon was backing another group, and those two groups are fighting each other. So the U.S. doesn't even know which side to pick, or strategically the US actually wants that. It's this dumpster fire warfare where we're just creating this chaos and conflict. And this current overthrow of the government, Assad's been pushed out. I'm very cautious to say this is what happened and this is what's going to happen because I think a lot of information is going to come out in the coming weeks. I would not be surprised at all if this was a very much CIA backed or encouraged coup, meaning the U.S. spoke with Turkey, encouraged Turkey, helped Turkey to back these rebels to push Assad out. In fact, Blinken had a call with Turkey 2 days ago, basically saying, and I know they give the readout of the call. They obviously don't tell everything, but it basically says, we're going to support Turkey. So Turkey's going to support us. We're going to try not to disagree on on other things. We're just going to try and push this initiative forward for right now. So I feel like I set up a whole bunch of stuff without saying anything.
Yeah. And regardless, whether or not the CIA is involved, one of the main methods of operation of the CIA is to not deny that they're involved with anything, to make it seem like they're involved with everything. So,
of course,
again, it's going to be interesting. It's a historic moment. What is going to play out? Second order consequences of something like this are always hard to predict, and we'll see. But hopefully it leads to some more peace and stability in the region. Although I've got doubts that there'll be more stability for some reason for a little while. Let's move to China. Some interesting, exciting stuff happening in China. China announced more stimulus and a quote moderately loose monetary policy. Basically what they said is China will adopt a more active set of policies to expand domestic demand in 2025. Domestic demand meaning kind of growth in their country with moderately loose monetary tools. So they haven't used this language since 2009 during the global financial crisis. This is a big step for China. Some of the things that they did: they reduced the reserve requirement ratio for banks by 50 basis points, injecting approximately 1 trillion yuan of liquidity into the banking system. They lowered the 7-day repo rate by 0.2 percentage points. They're introducing a special financing facility of $42 billion to support share buybacks and increased shareholdings for listed companies. They are establishing a $71 billion swap program to provide liquidity for securities funds and insurance companies. And they are relaxing mortgage policies by unifying the minimum down payment for second homes with that of the first, which is 15%. So in the past, if you were to buy a second home, it was 25% down payment for the second home rather than 15% for the first home. And they've just decided to reduce all interest rates on existing mortgages held by the Bank of China by 50 basis points, just like that. So very interesting. Cody,
it's like a trigger word, relaxing mortgage. Whenever I hear relaxing mortgage, and then it doesn't even matter what it says after that, it seems like, oh God, like I've seen this show before. This is right. Like the hair on the back of your neck stands up like, oh God, what comes next? Yeah. So, I mean, this is super bullish for investors around the world. This impacts everybody. And whether or not this gets unrolled as they just said, because everything you just listed sounds pretty complicated if you're not really into the finance world, but this is translation. China's going to
We're making it easier. We're making it easier. It's going to, if you just break them down simply, it's allowing banks to take more risk. It's lowering the cost of buying a house. All these things that are going to make, like they said, increase domestic demand. So that's pretty exciting. Yeah. What do you think? What do you think the average person, who is the average investor, should be looking at here? Or what's your kind of main takeaway from this?
So from the individual, I think this is pretty bullish. Safe haven assets and risk assets, because you're going to have part of the Chinese population and part of the global population that sees what we're talking about, which is, hey, this is starting to become more speculative. This is becoming more government intervention, which means it's likely that the reversal is going to be worse. So I should prepare for something bad. Gold prices go up, safe haven assets go up. You could argue Bitcoin is now in that category somewhat. Then you could also argue that risk assets are on, because there's going to be more liquidity. We just listed all these things that the Chinese are going to do, which means there's going to be more liquidity in the Chinese financial system. So people are going to take more bets. So you could
More
say
risk.
the U.S. NASDAQ is probably, you could argue, going to pump more because of this. Chinese investors are going to get their money out of China to invest in more speculative opportunities like the NASDAQ. They want growth. They see the U.S. has growth, or at least that's the forecast for it.
Yeah.
And I could also make the same argument for crypto, which is people are going to speculate more on crypto. And crypto is probably the most liquid market in the US from a 24-hour trading perspective, meaning the market's 24/7, globally available. So you have more liquidity somewhere, some market in the world, like crypto may pump there. I will end all of that by saying that this is another example of one more government making a pretty crazy move that will likely backfire
At
sometime
some
in the
point.
future. When, I don't know. And also the Chinese, we don't really know what's happening internally. They fudge so much of their numbers. We don't really know what these liquidity pools are compared to what there already is. And I mean, again, it's hard to tell, but I would say if you're an investor, take some money off the table, put it in a safe area. And if you want to take some bets, now may be the time.
Yeah, it's interesting to see, because at the same time, they're also resuming gold purchases after taking kind of a 6 month break. So,
Well, that was the other
yeah, I
half
mean,
of this. I was going to say
yeah,
is that you could say, so everything I just said, that's how the individual gets affected. But for the government, you could actually make an argument that perhaps China is preparing to buy new gold, which they said they are. They've taken 6 months off. They just started buying gold again in November. So the very simple way to say this is they're going to print more fake monopoly Chinese money to buy more gold. And if you were in a race between the countries, what better way to do that? Print fake money to buy a hard asset, which is gold. And then the other part about this is if they are artificially weakening the yuan, this is probably the biggest. If you listen to anything, I'm gonna say this is probably the number one thing. They're artificially weakening the yuan, so it's going to make it harder for the U.S. dollar to compete in a trade war that they know is going to be coming up as Trump comes into office. A strong dollar is not good for the U.S. This makes us a weaker trading partner for other countries globally, unless we have a huge manufacturing base, which we don't compared to China. So this is could turn into a crazy currency trade war with China. We have a huge trade deficit, the U.S. does, and further weakening the yuan is going to encourage the U.S. to weaken the dollar further, which is going to impact all their currencies around the world.
And looking at the U.S. versus China, right? We look at the two markets. Some of the biggest U.S. right now, U.S. markets are hitting all-time highs, kind of across the board, and China is not. China is much cheaper than the U.S. market, and it's very interesting to see like what's happening over here, hitting all-time highs. They're not hitting all-time highs in China. They're stimulating. They're doing whatever they can to encourage growth. Let's kind of dive in a little bit. The U.S. market cap to GDP ratio has hit 209% today. Let's dive in a little bit. Can you walk through some of the big ETFs, NASDAQs, like the S&P, NASDAQ, and Dow ETFs? How expensive are these in historical terms?
Pretty much all-time highs in valuation, numerical highs
Valuation.
for sure, but valuation too. So The stat
So
you just
explain
read.
the difference between numerical and valuation.
Yeah, so you got these benchmarks like the S&P 500, the Nasdaq, the Dow, the Russell. These are different collections of stocks that you track to see how they're performing overall. The Nasdaq, for example, is mostly tech focused, and the Nasdaq right now on a numerical level is the all-time high. But numerical level of like what benchmark it's reaching doesn't really matter, because as
Sure.
humanity progresses, you're always going to have higher and higher and higher. What matters is the valuation, and that's where it gets scary. So the valuation right now on the NASDAQ ETF, which is QQQ, that's what most people have made a ton of money on the past decade. The PE is at 42. So that's price to earnings. So that's the cost of purchasing all of the companies which are in the NASDAQ compared to the earnings. It's 42 times. That's incredibly, incredibly, incredibly expensive. And in fact, it's like literally all-time high expensive. It only really competes with the dot-com bubble. And you could
So it's
argue,
even higher than the dot-com bubble.
it's not. It's right about the same right now. It's fluctuating day to day. I'm cautious to say that because when this podcast gets published, which is a day or two after we talk, it could change. But it's pretty much a dot-com bubble. But the other alarming part is that the S&P 500, which you've got more outside tech, you've got some more balanced areas of the market. That's also at a PE of 30. So that's extremely expensive as well. And pretty much every indice within the US is extremely expensive. There's almost no area of the US market where you can look and say, oh, this is deep value or this is extremely undervalued. It's either fairly valued or grossly overvalued.
Yeah.
And the reason why this is happening is because people within the US and internationally are looking at the US, they're looking at what happened with Trump and saying, this is likely the only market to have exponential growth over the next 3, 4, 5, 10 years. Whether or not that's true, that's what investors are thinking. That's why they're putting such an enormous valuation on US markets right now. The question is, what's going to happen next? And no one has that answer other than to say, if you look at historical trends, now is the time to take profits. Now is the time to be very, very, very careful. And now is the time to do the opposite of what a lot of the sheep are doing, that the masses are doing.
Totally. And, this podcast is not investment advice. It's just kind of our thoughts on what we're looking at, what we're seeing. And it's very interesting because you can compare this to the rest of the world, right? You talk about the US market being extremely expensive, and then you compare it to some of the rest of the world. There's deep value in other parts of the world. The big question, though, is will those countries grow the way that the US is? No. But will they outperform on a return level, just given the fact that they're so cheap? So Brazil.
Yeah, you said
Brazil
it perfectly.
ETF,
Relative to the US, how are these other markets going to perform? They may not perform insane, but relative to the US, they may do pretty well. So Brazil, the ETF is EWZ. The PE is 4. No, but I just said the NASDAQ is 42. The NASDAQ is over 10 times more expensive than the Brazilian ETF, and they're yielding 8%. So the Brazilian ETF EWZ is yielding 8%. This is probably the starkest contrast of a major country. Brazil has, I think, over 200 million people in their economy. It's a major resource economy. I'm not saying Brazil is perfect. A lot of corruption, a lot of political issues, a lot of bureaucracy there. But this is crazy. The U.S. is over 10 times more expensive than the Brazilian economy right now. So if you're an investor looking at this, saying, "Oh, I'm going to cash out of some Nasdaq, equities and back into something cheap," Brazil is pretty interesting right now. Yep, exactly.
Colombia as well. Colombia ETF is GXG, price PE ratio of 6 and a yield of 7%. Then there's also Mexico and Germany. So Mexico ETF, EWW, PE ratio of 10 and a yield of 3%. And then Germany is DAX, and that's at 16 times. Price to earnings is 16 with a yield of 3%. So those are significantly cheaper. Explain the yield to people. What does that mean? And compare the yield between some of these and what's happening in the US.
So a yield is the percentage you'll get return on your investment. So if you put $100 into Brazil ETF and the yield's 8%, you're going to get $8 back over the time frame of 1 year. And these are issued by dividends. Now, usually when you look at a stock or an ETF that's issuing a very high yield, that sometimes can be alarming, because although it looks good on paper, I'm getting a yield back. You would expect a company to, instead of issue dividends, reinvest their profits back into the company to grow it. But when you have an economy like Brazil, or a commodity producer, let's say it's a gold mine or they're drilling oil, a lot of times those companies can't reinvest back into the companies to make it more efficient, because they're literally drilling a hole, pulling oil out, and then selling on the open market. And so they'd prefer to issue these dividends. So a country like Brazil, that doesn't have, say, a huge tech industry with exponential growth, they'll just issue these dividends. Another important part to note is that a lot of countries like Brazil and Colombia, with these two ETFs, the government owns about 50% of a lot of the oil companies. So the dividend that these oil companies are receiving, half of that money is being actually issued back to the government. So the government has a very incentivized reason to have these companies issue these dividends. It's like a cash machine for these governments. And if you're an investor, you could say, oh, I'll just ride the coattails of these government investments in these oil and gas companies. The problem with that is you're probably not going to see exponential growth on the share price itself. So maybe it's a good place to hang out for a little bit to get some yield, but you're not going to see huge share price appreciation.
Well, and also you may go down, you may get 8% a year, but then if it goes down
exactly
15%, you're still down.
Yeah, you just lost all the money on the share price. You're getting the yield, but you lost money on your principal, what you invested, which that's not okay. But I think I wanted to go over these numbers. Let me list 3 more companies in the U.S. Palantir. I'm a huge Palantir bull on the company. I just sold all my Palantir shares a week ago. I'm missing on a little bit of the upside, but I had like 300% return in the past year. I'm like looking at this like, whoa, this is pretty crazy. Palantir has a PE of 370 right now. I'm bullish Palantir on the company, but the valuation is obscene right now. CrowdStrike is another company, PE of 700. It's got a PE.
What does CrowdStrike do?
They're like AI, data management, security. So it's mostly all tech in the cloud and all that. Another company, NVIDIA. Everyone knows NVIDIA. NVIDIA's PE is 54. NVIDIA has massive growth, and there's a lot of reasons why NVIDIA may continue to grow, but the PE is 54. 54 times earning. People are purchasing NVIDIA expecting 54 times future growth. I mean, it's very, very high valuations. And I wanted to say all this because if we listen to this podcast a year or two from now, we may look back on this time and go, how did we not see this coming? How do we not just say, hey, Brazil is cheap right now, we shouldn't put a little bit of money there? How did we not say that a PE of 700 is obscene? But the market right now is like, oh, we're going to have future growth forever because the US is going to dominate the world, and we're never going to have a correction.
I saw that was a great tweet from Cuppy. He was like, I spent 20 years studying markets and valuations and looking at all these things just to be outperformed by some guy who buys fart coin.
Totally.
And it's from my own personal perspective from the last couple of times the crypto markets have gone bananas, is that you start to feel like everything is in banana land, and you start to be desensitized to the fact that there's 100% returns over a week, or I think since we talked about Sui on this podcast, it's up like 100%, and that's been just like a month or two. It's crazy. So
there was a Wall Street Journal article came out a couple of days ago, and it said young men are making outsized returns in crypto and bets on the political environment. And I feel like that's one of those article titles you see towards the top of a market. It's just you see crazy stuff going on.
Well, if you convert your crypto into US dollar, it's a good freaking time to travel. The US dollar is extremely, extremely powerful right now. So USD to what's happening in Brazil? So that was one of you've kind of signaled.
Yeah. Really quickly about Brazil, I think there's a pretty strong argument why you should avoid the country at the exact moment. But that's also like a perfect contrarian trade. So the Brazil currency right now has weakened against the US dollar by 128% over the past decade. And right now, this is December 2024, it's the weakest it's ever been to the US dollar. And if you're a US dollar holder, even a euro hold up pretty much every currency that's in the Western world compared to Brazil.
You can go to Brazil.
Oh man,
for cheap.
You're going to have enormous purchasing power. And I really quickly about Brazil, I think the politics will change in a couple of years. Lula, who's the current president of Brazil, he's a socialist, and the economy is actually doing all right under him. But I think the tide will shift in the next election. Bolsonaro, who actually internally is polling very well right now, he actually is not allowed to run until 2030. They had a similar type issue as they did with Trump, which is, I won't go into the whole thing, but there's a chance that Bolsonaro could come back. And if he becomes president, I could see the Brazilian markets rip in the later half of the 2020s. And right now the bottom of Brazil. I don't know, maybe it goes a little bit lower, but we're getting pretty close to a point where the valuations are so cheap that investors are going to have a hard time ignoring this economy.
But good place to go visit. I mean, especially in the winter time in North America, you can head down to Brazil, Argentina, places that are great to escape. Japan also. I mean, we've talked about this in the podcast before. The U.S. dollar is up 50% in the past 5 years. It's almost the weakest ever. I think it's about 150 yen to the dollar. I think the highest it ever was about 160 over the summer. So you're right in that range. It's a great value to travel to Japan. Wonderful, wonderful place.
I think the last time I went there, the beer, I went out into Tokyo for a day. Beer was like $18 or $20.
Oh yeah, you don't.
This was years ago when when Japan was super expensive. So now's the time.
Japan will never be this cheap again. It just never will be this cheap again. It's the time to go if you are holding North America, like U.S. dollar. Yeah, wonderful place. I want to get out there and go skiing again. It's just like the skiing in Japan is so good. I'm getting ready over here, Cody. I'm like fired up to get on the mountain. I haven't skied yet, but
you have Mount Hood near you, right? You can go to Mount Hood.
I got Mount Hood very close. It's like an hour and 10 minutes away. The snow is coming down. I just have been living in Texas, so I haven't bought skis. I haven't had skis, so I got to buy a pair of skis and boots, and that way it's just easy. You can just go. Right, you want to remove all the friction from that 1 hour drive out there.
But you're a skier. I feel like that you're not allowed to do that. If you're a skier, you got to always have like a pair of skis and boots. You got to be ready, right? I mean, you grew up doing.
Well,
that.
Kind of. I mean, the reality is, I would only get like one trip. I've been living in Texas. I get like one trip a year, so I just rent like nice new stuff, and it was. You don't want to travel with it, right? Like like flying with skis sucks.
Doesn't ski technology kind of like evolve every several years too? So if you get stuff that like 4 or 5 years later, it's kind of obsolete.
That's why I would just like rent the nicest, newest stuff, go ski, and then you've got it. Then you just leave it there, right? Go to like Colorado for a week or wherever. But yeah, I'm back in the Northwest. Got to get some skis. Got to get out there and start shredding.
Yeah, I think we all need that. Everyone needs like some outlet just to step away from the market, step away from the crazy world. You need that. It's good for your mental health. And that's what I'm doing in Arizona. I'm just going to go out into the wilderness and hike around and mountain bike and shred the mountain. And
it's good.
And have fun. Yeah, exactly.
Have an epiphany about, timing the market.
Yeah. Or just like, I think, we talked about this a long time ago. One of the best things to do as an investor is to step away from the machine, get away from the computer, go for a long walk, disengage yourself. Sometimes the best strategy as investors to do nothing and not make a trade. Just go separate yourself. Don't touch the computer. And that's probably the lesson for us probably for the next year or so.
Unless you're holding tons of fart coin, if you are, do not leave the computer. Make sure you are there, because when it starts moving, you got to get rid of it.
Yeah, you need to offload that on a bunch of normies. You need to get rid of
that. Awesome. Well, great episode. And if you guys have been following us for a while, the best way to support, go write a review. Go write a review for the podcast, either on Spotify or on Apple Podcasts, and let us know what you think about this episode. We will see you on the next episode of the Adventure Capitalist.